Hey everybody, happy January 2nd, 2021. I hope you guys had a great New Year's, but you know what? It's time to get back to work. So in this video, I'm going to share with you my entry and exit rules for my new Forex algorithm that I am forward testing on YouTube. Like any good trade plan, we want to be sure that we have all of our specifics written down for whatever system it is that we're using. So these are the things that I've captured for this new, what I'm calling SSL algorithm, because SSL is my C1. So I have a document. I'm not going to show you the whole document, but I've got indicators, I've got my general setup conditions, and we've got entry rules and exit rules and trade management rules. So what I want to do right now is go through some of these entry and exit rules with you. So the first thing that you'll do is you'll open up your chart. And again, remember, the general parameters is that we do this 20 minutes before the daily candle closes. And as you can see, I've got my indicators on here. I have my baseline. I have my QQE, I have my SSL, I have my multi-trend index, and I have my candle volatility index. I also have over here my data window, and what I like to do with my data window especially is look at this QQE number here, because sometimes it's hard to tell exactly where that is. So we're taking a look at the chart and we're looking for an entry signal. And there we go. We have found one. So this is an example of the first type of long entry, and that is when your C1 gives you a signal, because there are a couple. There's also a baseline cross entry, which we'll talk about a little bit later. So here are the rules for a C1 signal for a long entry. First of all, you want to have a fresh C1 buy signal within 2 candles. That means that your SSL is green for a buy. Okay, so here I have my SSL. You can see that it just turned green right here for a buy. And we follow that up and we look at the candle. And current price is above the baseline and no more than 1 ATR. Right here we can see current price is above the baseline and we've got a nice green dot, so we know that it's not any further than 1 ATR. And QQE is above level 50. So here's our QQE, and we can see it looks like it's above 50, but just to be sure, let's look over here at our data window and we can see, yes, QQE is above 50. It's 51.87. And multi-sync index is above 0. This is our multi-sync index. We can see that it is uptrend. And finally, for our volume, our candle volatility index is valid, meaning that the bar is above the moving average. You see right here, here's our bar and it's above the moving average. So this is a valid C1 signal entry long. So we enter the trade. So you can see that we did enter here and we went up and we hit our first take profit. Great. But now what? When do we get out? So now that we're in the trade, we're going to switch over to our exit rules. Okay, so the exit rules are the same for either a long entry or a short entry. Of course, you just flip them for whether you're long or short. But the first thing that you want to look for is you want to look at your exit indicator, and I am using the QQE as my exit indicator, but I'm using it differently than I did as my C2. Remember, my C1 is I was looking for that blue line to be above the 50 level. This time I'm looking for buffer 0 and buffer 1, which is basically the blue line and the white dotted line to cross. So if we look right here, you see how this blue line has crossed over the white line. So that is my exit indicator sign to get out. So we would have gotten out on this candle, and this is where we would have exited. As you can see, it's above the take profit level. Other things you're going to look for is the C1 flipping and the multi-index flipping. Okay, so here is the example of the C1 flipping. Okay, it occurred a candle later, and that's where we would have gotten out. So as you can see, my exit indicator would have given me a few more pips. Okay, but this still would have gotten me out above that first take profit. And then we're looking for a multi-sync indicator which didn't flip for a long time, or we're looking for it to close on the other side of the baseline, which it never did, and obviously it never hit stop loss. So you might be saying, well, that's great. Okay, so we got in here and we had our first take profit, and we had our second trade in profit as well. But what about all this? Look at all this that we missed. Yep, that might happen. But you also might have an opportunity for a continuation trade. So here are our rules for a continuation trade. Okay, and this is a continuation with a C1 signal. First of all, current price is still above the baseline and has not crossed over the baseline between trades. So here was our first trade. See that the current price is above the baseline and it never crossed over the baseline. The previous long trade has ended due to a C1 flip. So here we were in this trade, right here, our C1 flip, and we were out of that trade. Now the C1 SSL flips back and gives us another fresh buy signal. Okay, so here we go, boom, another fresh buy signal. And the QQE is still above 50, which it is. Multi-sync is still above 0, which it is. And with a continuation trade, remember the ATR or 1 ATR rule and volume does not need to apply. So here we have a valid signal to go in for a continuation trade. Once we're in the trade, now we just look at our exit rules again, and our exit rules are the same as what they were before. As we can see here, this is where we had our first exit right there. Our QQE crossed over, the blue line crossed over the white dotted line, and at the same time we had our SSL or our C1 flip the other way. So that is where we would have entered, and we would have gotten out of our second trade there. So this run gave us a couple of nice trades. Our first trade was here, okay, and then we got out, and then we got our continuation trade here, and it went up again. Now let's take a quick look at the same kind of entry, but for a short. And we can go through this pretty quickly. First of all, we're looking for that fresh sell signal from our C1 that we have it. Our current price is below the baseline. QQE is below 50. Multi-sync is in a downtrend, and we have enough volume. So there is a good entry. And once we go in, we can see that we hit our take profit here. And now we're just watching our exit rules. And here was our first exit right here. You can see that this is our exit indicator, QQE, crossing up over the white dotted line this time. So that's where we would have gotten out. Okay. Now, if we waited, maybe we missed that one. Our next exit is when our C1 flips, okay, which happens right there, and that's where we've got it out again. We would have lost a few pips, but hopefully we would have seen one or the other. And finally, we had here if our multi-sync flips, here's our multi-sync flipping, or if the price closes on the opposite side of the baseline, right there. And at that point, we would have gotten out way up here, still below our break-even point, and of course still below our stop loss. So those are the exit rules for our short entry. So the other type of entry that I wanted to tell you about was the baseline cross. This is a little different. than the C1 signal entry because the indicators, the way you look at them is a little bit in a different order. So here are the rules for a baseline cross, and this is for a long. The current price crosses up and over the baseline, and that means that it's going to close on the other side of the baseline. So we're looking for that. Okay, and we can see that happens right here. Okay, and C1 is already giving us a buy signal within 7 candles. So that means that, look, we had our C1 signal way back here, but at that point, our price was below the baseline, so it wasn't a valid signal. But at this point, it crosses over the baseline. The important thing to remember here is this is that bridge too far rule. So whenever this crosses, we want to make sure that it's within 7 candles of when that C1 flipped. So let's count back. 1, 2, 3, 4. We're good. Good to go. Again, we still want to check our QQE. Is that above our 50 level? Yes, it is, 51.05. We want to look at our multi-sync index. Is that in an upward trend? Yes, it is. And do we have volume? Yes, we do. So this is an example of a baseline cross entry. And then again, once we're in the trade and we hit our first take profit, then we go back to our exit rules and we would have exited here on our exit indicator QQE and gotten out right there, which is nice because that looks like it is like maybe 2 ATR for our second trade profit. So all of this is in a document that I have added to my NNFX toolkit folder, which I have on my download page, which is www.forexwithjjtrader.club. And you can get the whole document there, and it's got all of your entry rules for longs, entry rules for short, exit rules, and trade management, etc. And this is what it looks like on the website. Again, it's all free. I'm not selling anything. You would click here to download the toolkit, and also I have all of my indicators now in a folder. So again, I updated the toolkit to include that document, and I've also added the indicators. So hopefully this will help you with your trading. At the very least, it'll help you to understand what's going on in my little mind when I'm trying to make these decisions. But anyway, have a wonderful trading week, and we'll catch up with you again soon.